Hi, this is Malkley with Income Lab. This video will walk you through a demo of the Income Lab platform and showcase how the software is revolutionizing the way advisors guide their clients to and through retirement. Income Lab is a financial planning tool that focuses on the three most important questions that every client has. What can I afford to spend in retirement? What could cause me to adjust that spending? What could those adjustments look like? You will notice that we do not show any scores or probabilities here because clients don't fail in retirement, they adjust. Click View More to break down how much of this income is from Social Security, other income sources like pensions and annuities, and how much is withdrawals from the client's portfolio down to the account level. We can see here that about 45% of this client's income is from safer or guaranteed sources like Social Security, annuities, and pensions. One of our most popular features and a client favorite is our retirement income guardrails. Advisors can show clients how much their portfolio would have to grow for them to receive an increase in income and how much of an increase they would receive. Or in a downside scenario, they can see how much of their portfolio would have to drop for them to receive a decrease in income and the size of that decrease. Of course, there's no one-size-fits-all when it comes to clients and their retirement plans, so we give you a range of options that help you tailor these guardrails to your clients' risk preferences. If your clients are a bit more conservative and would like to see their plan essentially run on autopilot, you can decrease their starting income, which in return gives them a very low chance of ever hitting their lower guardrail and needing to trim spending. Or maybe you have clients who are a bit more aggressive and would like to live life to its fullest. These clients can spend more, but the trade-off would be a higher chance they'll hit that lower guardrail in the future and need to tighten the belt. The goal here is to set up clear expectations from the start in dollar terms so that clients know what to expect if or when their income may need to be adjusted in the future. But we don't stop at setting the right expectations. You can also set any Income Lab plan to be tracked and monitored. Each month, we automatically update all plan values from account balances to ages, inflation, and Social Security benefits, and let you know if any plans are off track and call for adjustments. That way, you and your clients know there's a process for keeping them on track. With guardrails, we know that plans don't fail, they adjust. But what could a lifetime of adjustments look like? And how do these plans fare in tough times? To answer these questions, we can take this plan and run it through some of the worst economic time periods in history, like the Great Depression, 1970s stagflation, the dot-com bubble, and most recently, the global financial crisis. This helps us see how this plan would have navigated the returns and inflation from these periods and when adjustments would have been called for to keep the plan on track. For example, during the global financial crisis, this plan would have called for a $500 decrease in income. But by 2015, this relatively small and temporary adjustment is over, and income would have increased from there. If advisors want to show more details to their clients, they can scroll down and show how the balance and guardrails would have performed through these periods. The green area is the upper guardrail, the red area is the lower guardrail, and the blue line in between is the portfolio balance. You can see when the balance hit a guardrail, and on the graph above, we can see what impact it had on their income. The stress test is also a great place to compare different planning options. For example, here we can see the difference in income experience between a plan with a balanced portfolio and one with a heavy stock allocation. Or in this example, we see the smoothing of the retirement income experience that could come from allocating some of a portfolio to an annuity. This is a great way to help clients understand what adjustments could look like and to make important asset allocation and investment choices. Once you have a plan for how much to spend and how to adjust, the next question is, how should I source my portfolio withdrawals and should I consider Roth conversions? To answer this question, let's move on over to the Tax Lab. The Tax Lab helps to optimize your client's plan for tax-smart distribution planning. It helps to give comprehensive, high-quality advice on how to source portfolio withdrawals and optimize taxes over the long term. Quickly compare the tax performance of different strategies to quantify how adopting a tax-aware approach could help clients, and dive into a strategy to explore how taxes evolve over time. With no additional data entry, Income Lab will automatically show the strategy with the highest projected long-term net income or lowest total taxes and compare it to the most commonly given advice, which is sourcing your taxes from taxable, tax-deferred, and then tax-free accounts. These results show the impact of utilizing a more tax-efficient strategy over the life of the plan. If you click View Strategies, you can quickly analyze all the different strategies available in the software and select the ones you want to compare. The Tax Lab helps advisors easily show their clients how much they can reduce their average tax rate, how much they can save in overall taxes, the amount of net income that means for them, and how much they could leave in their legacy by following a tax-efficient distribution strategy. Our total tax view shows estimated annual taxes for each strategy you're comparing. The Show Table button below will open a spreadsheet view of the side-by-side comparison. Another important thing to consider is the break-even age of doing these conversions. Sure, clients could be saving hundreds of thousands, if not millions of dollars, but if they do not break even until they are 100 or even 105, does it really make sense? Maybe it does depending on their legacy goals for their kids or heirs, but we will show you the cumulative taxes for both strategies here and mark where the plan needs to make it out before you start to reap the benefits of doing one strategy over the other. You can also see that this is where your expertise as an advisor comes into play. We give you the best foundation and analytics for you to then interpret and make the best decision for your clients. Rather than comparing two different strategies in the Compare section, we can also dive into the Explore section where we can look at any TaxSmart distribution strategy on a year-by-year basis. Here you have a nice visual showing how the ordinary income is filling up the tax brackets. You can also see how the long-term capital gains income is filling up its respective tax brackets, as well as the different Medicare IRMAA brackets and if they are being triggered. On the right, you have a legend that lays out what the amounts may look like for Roth conversions and all of your other sources of income. You can also see some estimated actions for the year, such as making withdrawals from taxable accounts, withdrawals from your tax-deferred accounts, and in this case, additions back into your tax-free accounts. The Show Table button below gives you access to a detailed full plan view of this information, making it easier to understand how the plan develops over time. Just as important as income, we will calculate all taxes for you on a federal, state, and local level depending on your distribution strategy. When you open up the table view down below, you'll notice we also account for the extra Medicare IRMAA premium that may be present in a plan. You can also see the client's effective total tax rate throughout the length of the plan as well. All these modules and tables are downloadable to be put into reports. We know a lot of clients and advisors are trying to get rid of the 50, 60 page binders, so we give you the option to pick and choose how in-depth or high level you want your reports to be. I'll bring you to our last main feature, which is LifeHub. LifeHub is your one-page financial picture where you can easily lay out all the different moving parts of a client's plan on one screen. Typically, we will see most of our advisors start their conversations with their clients here because you can interactively move through all your different sources of income, expenses, assets, and liabilities throughout any year in the plan. We've even had some advisors reach out to us letting us know that their clients rediscovered an old 401k or investment that they had at their old employer due to this view. Since LifeHub is completely interactive, you can make changes on the fly with your clients. Let's say they wanted to explore taking Social Security at a different date. Our Social Security tool allows you to use this slider below and see what the benefit amount and break-even age would be if they were to take it anywhere between 62 to 70. You may also see by changing Social Security how this will affect portfolio withdrawals and all the other moving parts in the plan. Or let's say you're building a plan in LifeHub. You can quickly click to add any input to the plan right on the LifeHub page. For example, let's quickly add a pension. This pension pays $1,500 a month, it doesn't have inflation adjustments, and it goes away if Tim dies. You can also change the asset allocation on the fly. Select an investment account, then use the slider to quickly select a more aggressive or conservative asset allocation, or select model allocations to choose any of your pre-built custom model allocations. LifeHub also has a timeline that illustrates all of the different important financial milestones in the plan. Whether that be the first year of retirement, when Social Security kicks in, a house getting paid off, special trips, or even when RMDs start. This feature allows you to navigate to any year in the plan and see how cash flows may be changing as the plan evolves throughout those golden years. In addition, LifeHub seamlessly integrates with Income Lab's Tax Lab, making it straightforward for advisors to share with their clients the process of implementing a Roth conversion. On the LifeHub page, advisors and clients can clearly see how much will be moved from one account to another in each year. LifeHub gives you so many options for helping your client understand exactly how their plan works and how all the pieces fit together, regardless of the stage of life they are in now. To send clients home with a printed version of LifeHub, select Generate Report from the tool menu. You can also create more detailed LifeHub reports inside the Report Center. In closing, we believe planning should never be a pass-fail conversation. With the help of an advisor as a guide, clients can navigate whatever comes their way. At Income Lab, our mission is to revolutionize how people navigate their financial lives so that they can live with confidence. We hope you will join us on carrying out that mission. What do you say? Ready to see how Income Lab can transform your business? Click the link below or visit us at incomelab.io.